Welcome back. Today we'll be reviewing Floor and Decor Holdings Inc. Ticker symbol FND. So we'll be looking at some bullish PR reports. The first one is talking about how they opened up a new store in Ypsilanti, Michigan. The second one is talking about how they opened up a new store in Palin, Texas. This would be the 12th store in the Houston metropolitan area. The third article talks about how they are opening up a new warehouse store, so a bit different in California. This will be the 12th warehouse store in California. And then finally, the fourth article talks about how they're launching a store in Brentwood, Tennessee. So a quick review of what just happened. It just released 4 PR reports about how they're opening new stores, not going to build new stores. They're all opening new stores. Obviously, this is bullish because, if you're opening new stores, you're going to get more customers, you're going to expand, your earnings are going to go up. We're going to look at some data here for the company. Our first bit of data is that it's 47% undervalued by Yahoo, which is pretty good. And you can see in the top right, its yield target's 88. The stock is trading just below 70, so that's about 25% upside, which is pretty good for a company, pretty good for a value company. After that, we have just some data about its valuation: P 26, forward 21, PS 1.78, PB 4.58. That's kind of high. And then enterprise EBITDA 17. Also, you can see here that included its return on assets were 5%, while return on equity is 19%. Not that big of a deal, but still kind of a bit disturbing that stock is returning more than it's making. The real problem here in the data comes with its balance sheet. It has a total cash of $7 million, while debt of $1.6 billion. For context, its market cap was $7 billion, so that's a pretty high debt. And it doesn't get better when we go to cash flow. Its operating cash flow is minus $56 million, and its levered cash flow is a lot worse at minus $544 million. So its data, not really looking that great, but still, I think with those articles, it'll do well. Moving on to another company that I use, Simply Wall Street. Here we can see scale and how Simply Wall Street rates the company, with value being at 2, future being at 4, past at 1, health at 4, and obviously dividends at 0. You can see how that compares with the little circle chart, and it has two rewards: 22% undervalued, earnings forecast go by 20%. The earnings forecasts aren't always right, but it's good to see, it is forecasted. Again, Simply is agreeing with what we had, and then Simply says high level of non-cash earnings. That is a red flag, but still, I think those articles will really have some good momentum going for them. And then finally comes with Zacks. Again, Zacks isn't looking that good, with a value of C and a growth of C and rank of hold. But what you really have to be looking at is this isn't necessarily really bad data. It's a value stock. What would you really expect except for it to have a high amount of debt? And its debt isn't that bad. Its cash flow is a bit bad, but it's like an average stock, or slightly below average on the data. But with it releasing a lot of new stores, we could see some good short-term momentum, or good momentum once we get to earnings. And if that doesn't convince you, it's a Warren Buffett stock. And it's bound to go up. It's Warren Buffett.